This is Kenya News Update today. Imagine waking up to find the skies over the Middle East closed. Thousands of flights grounded. The biggest disruption to global air travel since the COVID pandemic is happening right now. And it's sending shockwaves through the global economy that will hit your wallet. Coming up, you'll discover why a conflict thousands of miles away is crashing airline stocks in Asia and how it could affect fuel prices and travel plans here in Kenya. Meet the investors and travelers caught in the crossfire. The trigger? US-Israeli strikes and the death of Iran's supreme leader. But here's the twist. While airlines are crashing, other sectors are soaring to incredible heights. Singapore Airlines plummeted more than 6%. Japan's ANA and JAL each dropped over 4%. Hong Kong's Cathay Pacific slipped 3.63% lower. Australia's Qantas and Taiwan's EVA Air also declined more than 4%. It's a sea of red for aviation, as investors panic over higher fuel costs and massive operational chaos. Busy hubs like Dubai and Doha are shuttered. The ripple effect is global. But here's what nobody's talking about: the other side of this financial earthquake. While airlines are nosediving, energy stocks are rocketing into the stratosphere. Oil futures initially jumped a staggering 8%. West Texas Intermediate crude last traded at $69.68 per barrel. Brent crude was at $76.13, and that surge is creating instant winners. Woodside Energy in Australia and Inpex in Japan gained as much as 5%. China National Offshore Oil Corporation in Hong Kong rose more than 3%. It's a classic war market play: sell travel, buy energy. But wait, there's more. A third, quieter sector is also on the move. Defense stocks are ticking upward. Japan's Mitsubishi Heavy Industries, Kawasaki Heavy Industries, and IHI rose between 0.47 and over 2%. Singapore's SD Engineering climbed 3%. The gears of the military-industrial complex are beginning to turn. And then, something shocking happened. U.S. President Donald Trump said Sunday that combat operations in Iran will continue after 3 U.S. servicepersons were killed. This declaration turned market jitters into full-blown panic, locking in the new reality. Gold futures jumped 2.3% as investors piled into the ultimate safe haven. The fear is palpable. Here's the part that will blow your mind. This isn't just a one-day market blip. This is a fundamental rewiring of global trade and travel routes. The Middle East is a critical global crossroads. When its airspace shuts down, the entire world feels it. Flights from Nairobi to Asia and Europe are being rerouted, adding hours and burning costly fuel. The implications are massive and controversial. Some see a temporary disruption. Others fear the start of a prolonged regional war that will keep oil prices high and travel chaotic for months. For Kenya, a nation connected to the world, this means pricier imports, more expensive airfare, and nervous investors watching from the sidelines. But if the airlines are grounded and oil companies are profiting, who really wins in this new conflict economy? The answer is complex and unsettling. Do you think this market split between crashing airlines and soaring oil is a short-term reaction or a sign of a dangerous new normal? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking global news that impacts you.